All right, ladies and gentlemen, I hope you're having a wonderful weekend. Today, I want to talk about how you can make a living in 10 minutes swing trading. Now, this is a bold title. This is a bold claim. I saw something in one of my recommended videos. It kept coming up, and I saw a lot of people. I didn't watch the video, but it seems like a lot of people got drawn towards this, and we did a trade over this weekend. It was an option trade. It was a nice $40 into 200, and we already hit another 700%. It was nice, but a lot of people, they liked the fact that it was quick, and it still fell in line with a lot of the criteria. So today I'm going to talk about this key 10 minutes after the market opens. This is an opportunity where I want to give you guys just something simple, straightforward, and to give some of you guys an area to focus in on. Some of you guys, again, if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it's pinned in the comments, but we are trading live every single day, and you could come on stream. We're literally trading open till close. It's 7 hours a day, and I've talked about this with the long-term investing. I did a real estate video for you guys yesterday. There's many different ways for you guys to all get involved. You know, I don't always have to be on there trading it to hit every play. You know what? I just love you guys. You know, I love the stream. I love chat. Shout out to chat, baby. That's why I'm there. You know, there's stuff that happens with news events. Those have their own unique way to play them, but you don't really need to be on the market the whole time. You know, so the key concepts of surrounding this is this 10-minute window. I'm going to show you guys kind of the plays that we did, and I'm going to go through about 7 or 8 other plays this week that you could all kind of see this happen. And now I'll zoom in a little bit here and there to highlight them, but the key is kind of understanding the logic behind this and why this occurs. The first thing right off the bat is that the first hour and a half and last hour and a half of the market, that's what they call, you know, power hours, the last hour, that is when the most volume comes in and out for the day. I've even talked about it with my earnings trades. You guys have seen me make plays either in the morning or right before close. You know, imagine a marketplace open, and if you are looking now, this is where I'm saying swing trading, because one thing we're going to learn with this play is, yes, you could make some good flips, but even better, you could make good swing trades. This is how you could really take low risk investments. Literally, like that target play was $40. We're still holding it. It's worth $200, but now you could get a lot more upside. You know, I had another play on target. I sold out of that. That one was $60 into $400, but it would be worth right now about $700. I could almost double the profit just by giving myself the extra few days. So that's kind of the key here. We're looking at options with a little bit of time, not a lot, but not necessarily the weeklies. And the whole idea is swing trading it, where it's not saying you buy and sell in the same day, but you buy it and then you hold it for a few days to kind of, you know, ride the wave with it and let it cash out. Now, you can use an element of day trading to make this free or do a ghetto spread. We'll talk about it, but the key is going to be swing trading and giving yourself time with this. So now we will call this, for simplicity's sake, you could call it the 8-bar play, or you could just call it this window. And really, I say 8-bar play because I trade on a 1-minute chart and I look at this minute by minute, and usually around the 8-minute mark is when things kind of either pop off in many ways, shapes, and form. And what I mean by that is that it could easily reverse. It doesn't necessarily tell you which direction the stock is going to go, but it does let you know now from a price action standpoint really how the market's going to start taking this. And again, this is part of the underlying logic of how I view this. This could be very technical, but the way is kind of understanding the processing. You know, like I said, beginning and end of the market, when you're swing trading day by day and you're trying to evaluate the price and there's an open marketplace, the price you get during the middle of the day isn't going to be reflective of what's happening at that time or the rest of the day. So actually, this is really, maybe we could call, this will be the secondary name for you guys. This is called the IHOP, because if you went to IHOP in the morning, or if you went to IHOP or Denny's really extremely late at night, you would notice it's usually crowded. But if you use that first 15 minutes or that first 2 hours in the morning that IHOP's open to gauge its overall business, if you knew nothing about them and you saw IHOP one day in the morning, you'd be like, this is the best business in the world. People are lined up everywhere. Everybody wants to come here. You come back every single morning. You're like, wow, there's a ton of people. But then on the reverse, if you went and you were like, I'm going to analyze IHOP as a business, I want to buy one, and you went there every single day at 2 p.m. and that place is virtually empty, it's not really representative of what's happening with that business. So this is how we're looking at stocks in the open and close. It's understanding you're getting volume rushes in the mornings and volume rushings at the close. And now this is kind of how people are looking at price. And now playing this strategy is understanding events that could cause price to move, because then what happens is that people from the end of the day or everybody in the morning, there's all these high-speed computers, but it takes about Wall Street 10 minutes to sort everything out, meaning you have all the people reacting to something, and we'll talk about this in the news sense, but people start reacting to a stock going up or down, they put in their orders, and then that's now clearing all the orders that were put in the night before, the day before. It takes time for things to cycle. So that's where we're understanding how price changes, and that's why you get these swings. It's not even just the first 10 minutes. This is why you could have news, the stock comes up, and then it'll come down. Another example that we're going to even look at will be Disney, but you could kind of see the same thing here. They had that news, they shot up, and actually if you go before that, what happened, they already shot up. Then they came down for 2 days, shot back up again, kind of came down, and then boom, they're back up. And it's kind of doing that same thing repeated on a wider scale. This is price discovery in the market. So keep that in mind when you're looking at these, because that is how we're kind of looking at saying what would cause price to change, or now how is this going to get affected. But now here is this 3-bar play or the 8-bar play. This is what I'm talking about. This was that play we did on target. And you can see here, they had their earnings, they shot up, and then right off of opening, they started to come down. And literally for that first 8 minutes, they were dropping. You can see here on the bottom, the time's going to be right here. You're like bottoming out about 5 to 7 minutes in, then it starts to kind of come back up. And now this is where we made the trade. We bought it around 9:38. So you can see here that first 10 minutes. And again, I call it the 8-bar. It's kind of the sweet spot because it's around 8 minutes, but within one standard deviation. So sometimes it could be even like 6 minutes, but sometimes it'll be 10 minutes. And then on the longer scale, you've seen moves that happen after 20 minutes. And a lot of you have seen this after the move occurs, even coming into like middle of the day, it'll level out. An hour in, it'll level out, and then it'll come back and do its thing towards end. Again, the IHOP phenomenon there. So again, this is a very, very simplistic approach, but it's kind of understanding now, and this is what I'll talk about. I have a few keys written down. One thing you're going to be now, if you want to, this is a simple thing in nature, but it's understanding the option pricing, and that's going to be your key to watch, and understanding what the spreads are doing, and if it makes sense and a good risk reward to make moves. But you could understand here too, like I'm saying, this is an area you could focus on. You could just put your first 10, 20 minutes in the market, and you could focus on some of these stocks, let them do its move. It does that, you go to a ghetto spread, whatever it may be, but you're more likely to get a move within this first 10 minutes and then the resulting 10 minutes after than trying to play something throughout the end of the day. Or you might be able to get a good entry here. It goes up, stays up, you're a little bit up all day, and then it makes the move towards the end of the day. That's why I say this is also mainly a swing trading strategy. But you can see here, there's target, that earnings, it ended up going up. You saw the break after that first 8 minutes. Here's another play we played, Expedia. And again, all of you guys, if you were on stream, you kind of saw what happened with every single one of these plays. This is how we hit it. Remember, even the rollover on Expedia, this play we turned, it was like $40 into like $1,000 or something. Here, I'll bring that up. So here's the Expedia. We did this on an earnings play. We went $45 both ways. So it was $90 for the earnings. Again, we had that criteria. We had the videos on that. But then we ended up selling that we bought it for $45. You can see here, we ended up selling that contract for $1,200, $1,250. It was a nice return. But then that next day, what did we do? I did a continuation rollover, and I pretty much fell in line just like this. You can see I got executed at 642, and now this was a unique play because I was a little late on it. If you guys have been watching the stream, you could go back on this day and watch this live through the live channel. You could go watch the recap. It's still up there. But if you remember, I was discussing this, and I was going to go for the weekly. Those were at 20 cents. And those ended up going another 3,000%. I'll show you guys when we get to the chart. But I hesitated and I was late. But even then, this is 12 minutes within market. We sold out the first play, took our profits within 11 minutes. I took the other play. It took me 2 minutes. So again, when there's a catalyst and this stuff happens, that first 10 minutes, 20 minutes is pretty crucial. You're seeing how it made a world's difference, but that shouldn't be too discouraging because again, if only you have limited time to trade, you only have to really show up in the morning, or you just get your scream alerts so you never miss anything. You just shout out the scream alerts, baby. But right away, that 12 minutes, I bought these for 40, and then I ended up doing a spread, and then that play, actually, those expired worthless, but those went up 1,000% almost, or those actually went up 500%. I just didn't cash them out because I had this spread. But either way, on that whole $90 initial investment, even with these rolling over, we still walked away with a decent amount. But the key here is looking the timing, because this is exactly what happened now. You could see the stock already dropped. That's how we were up so much on the first play. So yeah, granted, we made a lot of money on that. But now let's look into that early morning so you could see really where a lot of that magic happened here. You come down to 8 minutes here. that's when it started selling off, continuing lower. So it opened up at 115 within 8 minutes. Now you're at 109, but then what happens if 3 more minutes later, here's that 41. That's when we sold out. It makes the big drop here a little bit from like 109 to like 106. Then it levels out for a few minutes there. That's within 15 minutes, but then that is what pretty much precedes that sell-off for the rest of the day. And after this point, really, again, I think within right around here, that first drop, which was literally just on that 10, 11 minute mark, this is when the contracts hit that no return point. But you could see it dropped, but then you didn't even have to play the earnings. You could have just played from that first 10 minutes and made out with 1,000% play on that one. So that one kept going. Another example here now is Disney. So there's 2 areas to highlight because this popped up during the news, and that was a news day. But this is now the second counterpoint that we want to make here, is that how fast things can occur. But this is within that first day after the news. There's still pretty much hype around it. So then what happens here, pretty much by the 8th minute, it's back to open after selling off. It really makes the ultimate bottom within 4 minutes. But then by the 8th minute, everything after the 8th minute, it starts rocking up there, and the contracts were at point of no return. But then by the 12th minute, it kind of sold off and it reversed. And now it did make one more move up. But this is one area you see it, but realistically, now this is where I'm coming down to see, within these time frames, especially in the morning, you're going to see some key pivot points. And again, it took an hour before it topped out. That may not be the best example, but then any of these other days where it did start to rocket off here. So again, and this is something I'm going to talk, I have a whole nother strategy. It's kind of the same thing, but this is those 3-day swings now. Off of earnings, it goes up and then it'll kind of come down, but then it'll start making its way back up here. You could get some nice swing trades there. But this is also another adage to say, though, if there is an event, that's a better chance for you. The more likely there's an event or underlying catalyst, the more likely you're going to see it break out around these points and have a big move that could continue. So here was that Monday, but right there again, pretty much within 8 minutes, 9 minutes, if it sells off and hits the bottom right there and it bounces off of there, that would have been your bottom. Within 13, 14 minutes, it breaks back out from open, and then it was gone from there. And that was another great day to get another pickup on Disney. But you're seeing that first minute window. Again, very simplistic here, but it's understanding how you could focus in at this moment in time, or focus on these mornings for your opportunity, really. But there's Disney, then there's even UNH now. Let's go to here. Again, this one was middle of the day news, but then what happened on the follow-up day? So again, analyze this from a perspective of how strong the catalyst was. It was strong, but again, it wasn't anything uniquely independent. Like, it wasn't an earnings continuation. But even then, within 6 minutes, 8 minutes, it hits the top. But then by your 10th minute, you get your big candle down, and then it reverses from there. So again, that first 10 minutes is a pivot point, if anything. So now for another one, HD, we could look at this on both days. And now this is an earnings continuation, so it's probably going to give you a stronger signal here. But look at 8, 9 minutes. You had the earnings. You sold off your 8th or 9th minute. You're at 228. From there, it breaks. At this point, the contracts pretty much made their move. But you dropped another $3. And that's just the first day of earnings. And again, you even saw this one actually happen with McDonald's too. That's just the first day, but it closed weak. The market was weak. So then it's going to have a second day of earnings continuation. And you can see here by the 8, 9 minute, it starts to break again, but then it actually breaks up. But then that day, it still came back down. But now this is what I'm saying here. You could use these pretty much as your swing trade. It really breaks within 30 minutes and then starts to go down. But again, with our strategy of going small on these options and not even trying to day trade the break, the whole idea is if you are able to execute it within this short time frame, get a good play, and then it breaks down, you're going to be so far up, you could either turn it to a free trade and hold it, but you're seeing every day after these. This is just getting a good entry on a continuation to ride the wave down with a safe, high probability play or higher probability play. So here's our other example. Walmart, again, they had their continuation play and sell-off. By the 8th minute, they were hitting a low, kind of bouncing up, but they failed that breakout and they ended up coming down. But again, you could kind of see how that ended up playing out. So you could even straddle within the first 8 minutes sometimes too and go both ways. But the key is watch the prices. But there's that, and then AMAT as well too. This was an earnings continuation, and again, we played every single one of these plays last week, so you guys are kind of getting to see it in a different fashion. But this one took about 10 minutes. This one took a little bit longer. After 30 minutes, it kind of hung around there, but then it slowly broke out. But this is a bigger float and a bigger mover. Then lastly, my favorite, because I'm sure you guys all remember this one, Qualcomm. Literally by the 8th minute, it was already topping out from moving up $2 right off the open. And then within 20 minutes, 30 minutes, it fully broke out and just went crazy from there. But it's pretty simple. This is simple. I feel like I'm just talking a crazy language because, again, we're just looking at the charts and the time frame. It seems very, very technical, but I wanted to just give you guys something. I really wanted to start simple and get really deep from it from there. But this is just something simple to look for and a spot opportunities to keep your eye out for. But understand how much of a simplistic fashion this is, and anything even to the extent of saying you're gonna get some crazy analysis after only looking at the 10 minutes. You got to take it with a grain of salt. But depending on your schedule, if you focus in on this and you're picking the right plays, you're gonna be able to know at least where you'll be able to find opportunity or point your eyes to and to see. So there is that. But now, kind of putting this all into perspective here, the main keys: 10 minutes of action. There's a lot of moves to be made. It's ideal for the swing trading or the ghetto spread. So again, my approach with this, I buy them. If I'm putting 20, 30, 40 bucks, if I fail on it. But if it does go in my favor, you're usually going to make 500, 1,000%. And then from there, I could either sell it and roll over. I could turn it to a ghetto spread. And that's usually the ideal way. Or you could even trade this by doing a decent amount of contracts. If you're right on the move, turn those into ghetto spreads right off the bat, and you could play bigger on there. But at the end of the day, if I was looking to do this and if I only had that first 20, 30 minutes, I would put my plays on in the morning, check them throughout the day, and even check them towards the end of the day, control it small, designate myself to X amount of plays per week, and then go from there. Then the next thing to understand is pretty much after that 10 minutes when you're looking at it, it's understanding how that could be both a reversal or a continuation move up. And this is why with swing trades, I've showed you all the different examples there. You're definitely seeing something happen within that first 8 to 10 minutes, but now it's not always accurate saying it's going to do this, it's going to bounce, it's going to do this. So you have to keep that in mind and understand this is just kind of like a signal, but it's not really an accurate signal. It's just kind of like a sonar getting sent out there, but you can't really decode the message as much. So keep that in mind. And then lastly, now option pricing is key to watch. During this, the spreads are going to be wide most of the time. So if you guys have traded options, this, especially in these earnings plays, you're going to open up your browser. You're going to open up your platform in the morning and you're trying to make a trade off of these earnings. You're like, whoa, the spreads are crazy. They're not accurate. This is what makes it a good time to both get some of these plays, but then you could also end up overpaying for a lot of plays because there's still a lot of IV. And then with all these orders, again, if you saw that other video I had on market makers, the market makers are going to protect themselves. They don't really know what the value is. So the spreads are going to be wide. The prices are going to be high. So you have to learn how to finesse that and don't get caught overpaying on that. And then finally, the key is to find a catalyst. The day after a big move or news is one thing, but then there's going to be earnings or even technical breakouts, certain levels. It has to, the way I look at those, even though they could be quote unquote technical, I look at price action from the level of something big breaks out, like Apple becoming a $1 trillion company, or a company that this is like their 10 or 15 year high or low. And it's based off of a certain amount of news where there's a real material change in the company, which is saying why investors would flock to it at this point, and it could get some attention. But you guys see how the market is, and there's a lot of computation and computer stuff. So I think, even what you see here is that first 8-10 minutes has to do even with the algo. So I will leave you guys with that. Let me know what you think. Give me some feedback. Give me some questions. And if you guys don't know, too, we are live Monday through Friday, 30 minutes before open. So I better see you on the live stream. Hopefully you guys are good. Have a great weekend. Make sure you are paper trading, too. And don't forget to like the video and subscribe. And stay blessed. Stay grateful. We are all blessed to be here. And that is it, baby. Let's go.